Welcome to the November 18th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman, with a fast-paced tour of this week's financial markets. And, of course, we're going to cover some details from the 2020 McGowanGroup client update and some strategy recommendations for next year. Now, it's not a recommendation for your portfolio till you actually come down and get a plan from McGowanGroup Asset Management, but we're going to focus on where the current markets are, some lessons from the past, party like it's 1999, the best economy the world has ever known according to J.P. Morgan, Jamie Dimon, and he runs one of the most successful banks in the world, so he said it'd be good for about 100 years. That was on 60 Minutes to start the week. And correspondingly, the Dow approaching 28,000 for the first time in its history at the close of the week. What gives? The S&P a new high and the NASDAQ. What stock is a major component of each of these three? Well, Apple. Their market cap topped $1.17 trillion this week, and of course, their highs were driving new highs as well. So it's a tech-driven rally again. The semiconductors were hot, but I wanted to cover 1999 and some lessons for portfolio strategy, because the entire energy sector in the Standard & Poor's 500 is now worth less than a single company, Apple. And what happened in the 1999 tech rally? Well, this chart goes from 1997. The yellow you see right here, that's the NASDAQ. It goes from 1,000 to 5,000 in just a couple of years. It was a huge tech rally. And the energy sector lagging behind as oil hit 10. What happened after that? Well, we got an 80% correction in the NASDAQ. They called it the tech wreck. And at the same time, oil, holding its own, not immune to the downdraft in the markets, began a romp, and it went threefold, while the NASDAQ was still just a fraction, about a third of its former self. What does this tell us? The energy sector could be the bargain category for 2020, especially when we look at one company worth more than all the Exxon Mobils in the S&P and all the energy sector. So that leads to a strategy discussion as we go forward. Here, we wanted to talk about GDP growth, right? Economic growth. Will there be a recession? So the Bloomberg probabilities drawn from the most likely outcomes, they show growth continuing to slow a bit through 2020. 2% projected for this quarter and last quarter, and falling down to about 1.7. What's inflation? Well, it's still about 2% along the way. So about 2% economic growth, 2% inflation. That may be boring with scattered surprises. So yield may come into play, especially if the tech sector stalls or worse. Here, Alex Tolin, head of trading and client development at McGowanGroup, did a 20-year chart, and he took the S&P, the 500 major stocks, reinvested the dividends, and over the 20 years got a 243% return. That was a healthy 6.3, including the run-up here right after the tech wreck. Now we take the pipeline index. It did 469% over the same time period, over 200% more. And what's this that did 891%? Well, that was global high yield with the dividends reinvested, about a 12% average over that period. These won't repeat, and all of them have price risk. But what does it tell us? Reinvested dividends made a huge difference here and here for two sectors, energy infrastructure and global high yield, outperforming the S&P, especially because of the tech wreck that started in 1999, where things were overweight. Final chart of the week. Municipal bonds, very expensive, what we're seeing right here in the municipal bond index, 113% of par. The short-term corporate high yield index at about 87% of par, a yield of 5 versus 2.3, less the premium. And it says that high yield still has some room to appreciate back towards par value. Those are the two category discussions. And for the safety and income portion, money markets may be the best choice if there's a rate spike, and short duration funds like floating rate loan funds could also play a part in a more conservative strategy for next year. I'm Spencer McGowan, President, McGowan Group. Visit us at NetWorthRadio.com, fill out that preliminary client questionnaire, and come down for your free 1-hour brainstorming session at the Crescent or a conference call with the team that cares to take your plan for 2020 and beyond to the next level. Thanks for joining us. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.